Hello guys, welcome to a new video. Today is a special video. I'm going to show you guys a strategy that no other mentor or anybody is going to show you. This is the new style of trading. This is not any ICT or SMC bullshit. This is the new style of trading. It's called three candle breakout strategy. This is a very simple strategy that even beginners beginners can do. Like absolute beginners, people who don't even know how to trade can trade using this strategy. This is the new style of trading. Like I said, it's not any ICT, SMC, any bullshit. It's just as the name suggests, it's called a three candle breakout strategy. So what it basically means is, so let's imagine this is a bearish candle. This is the candle's body, and this would be its shadow, right? Like a shadow or a wick. I want you to remember these terms. This is the shadow or wick. This is also a shadow or a wick, and this is the candle body. So this is a bearish candle. This is a single bearish candle. So our concept is basically it takes more than two candles, at least three candles to break this candle, that is candle number one. We takes three bullish candles. This is candle number one, this is candle number two, and this is candle number three. See, it took three candles to break this bearish candle's high. It took three bullish candles to break this bearish candle's high. This is the bearish candles. Oh, sorry, I mean not high, the open price. That's my mistake. Sorry, I didn't mean the high. I meant the open price. It took three bullish candles to break this bearish candle's open price. So this is basically the concept of the three candle breakout strategy. It doesn't matter if this candle breaks the bearish candle's shadow or not. All we have to see is the closing of the bullish candle is above the opening of the bearish candle. So what you do is you take the Fibonacci, you take the Fibonacci tool, and from the closing of the bullish candle which broke the bearish candle, you pull it to the recent low. This is how you would pull the Fibonacci, and this is the area where we would be looking for entries. As soon as price returns to this Fibonacci area, we take our entry. So another thing to remember is when you look for the three candle breakouts, it doesn't matter if this candle turns out red or this candle turns out bearish. It just needs to be more than three candles. Let's imagine this candle is a bearish candle, right? This candle is a bearish candle, so automatically this candle would be opening from here, and another bullish candle from here, and it broke out again. So how many candles is it now? It's four candles, right? It took four candles. One, two, three, four. It took four candles to break this bearish candle. Doesn't matter if the candles in between are bearish or bullish. You just need to count the candles. So imagine this candle has a wick or a shadow like very high. Still here. So what you do is you still pull the Fibonacci from the closing price. From the closing price of the candle which broke this candle's open price. You pull the Fibonacci from the close of this bullish candle to the swing low, and you wait for price to return to this golden zone for our entries. Or another type of entry that you could take is a counter entry where you could sell from these Fibonacci points. These would basically act as your targets once you take an entry. This would be a target 1, target 2, target 3. But what you would do is you could counter trade as well. If you miss this entry, you could look for sells from here. I wouldn't recommend you do that, but you could do that. It's fine. There's no problem in doing that. So I hope you get the point. It would be the same to the opposite side as well. If you're looking for sells, this would be the same concept. Let's look for live examples, right? Okay, so if we are looking for live examples, this is today's market. I mean yesterday's market. Today is Saturday, so the market is closed. So this is a live example. You could see here there are three bullish candles. These three bullish candles broke this bearish candle. So the break came right over here, right? This is the this is the candle that broke this bearish candle. This was the third candle that broke this bearish candle. So what we do is we pull the Fibonacci. We pull the Fibonacci from the close of that candle to the swing low. The swing low could be a bullish candle or bearish candle, whichever swing comes lower, you select that one. And you pull the Fibonacci, see? And this is where your entry would have been. Look where your entry came from. Perfect. This was the break. You pull the Fibonacci from here to here. And you could see this is where your entry is. This would have been your TP1. This would have been your TP2. How beautiful is that? This is TP2. This is TP1. In case you would have missed this entry, you could have taken sells from here after confirmation. I would recommend only entering trades after confirmation. Use any confirmation you want. I have my own sets of confirmation that I use. I would reveal it, but not right now. This would have been TP number 2. How many pips is that? How many points? That's 200 points, pips, 200 points, gold. This would have been 400. Wow. How much would you be risking? Imagine it's a swing trade and you want to risk like 100 pips. Nobody's going to risk like 100 points. You're going to risk like 30 or 40 max. So that's 10x 1 to 10R if you would have won TP2. That's a 1 to 10R trade. If you're keeping a 30 pip or 40 pip stop loss, doesn't matter. Even if you keep a 50 pip stop loss, that's still a 1 to 4R trade. Now let's look for more examples. You could see a very good example that is happening right now. This bullish candle, it took 1, 2, 3, 4 candles to break this bullish candle. So which was the candle that broke this area? It was this candle. This is the candle that broke this bullish candle. It took 4 candles to break this bullish candle, but it was this candle that broke. So we pull the Fibonacci from the close of this candle to the swing high. Pull it to the side from the close price. Where exactly is price rejecting from right now? From a golden zone. Price is rejecting right from the area we wanted to reject from. I wouldn't recommend you keep a stop loss this big. Like, how many pips is that? It's like 200 pips. Nobody's gonna keep a stop loss that big. Keep a tight stop loss, maybe like 50 pips. Wouldn't have a hit. You could have gotten a TP of around 100 pips. That's like a 1 to 2 risk reward. So I guess that's good as well. If you hold it, it could go more. Like this could have been your TP1. That's like 600 points. I don't think we have the psychology to hold that much unless you like taking partials and holding the rest trades. So that's example number 2. 2 cases where we won right at the live market. Let's look for more examples. Okay, so we have another example right over here. You have this bullish candle that took three bearish candles to break this bullish candle. So which candle broke it? It was, why does this keep happening? It was this candle that broke this bullish candle. So we pull the Fibonacci, and the candle that broke to the swing, and we pull it to the side. And we could have gotten an entry over here. We would have lost this trade, like it didn't hit our TP, but still you could have set a break even like after 50 pips. That's already like 200 pips. So if it was me personally, I would have closed my positions at like 100 pips, 150 pips, or 200 pips. I would have taken partials at least and would have set my stop losses at break even. So basically, you could say this is a win, but for the sake, let's say it's a loss. It's okay. But let me tell you why we lost this trade, yeah? Even though if it's a win, let me say what happened right over here. You see this area, this is where we show the first example. If you could see, there's a three candle break right over here as well. The first example that we showed happened right over here. So the overall trend was to the buy side, and we had a three candle break right over here, and we had an entry right over here. That's why this entry was limited, why it didn't work as perfectly as we wanted it. Now let's look for more examples. There's an example right over here. This bullish candle was broken by one, two, three, four candles. So which candle broke it? It was this candle that broke it. So we pull the Fibonacci from here till here. Pull it to the side. You have your entry right over here, and it all hits your TP. TP1, TP2. That's so many entries. You could have looked for counter trades since the overall trade is to the buy side. That's your wish. Use confirmations. I wouldn't risk trading both sides of the markets because that's double the risk. What we want to do is we want to reduce the risk, not increase it. Yeah. So let's look for more examples. Okay, so here is another example right over here. You could see this bullish candle was broken by one, two, three candles. This was the third candle that closed above this bullish candle right over here. See, this candle was one that broke. So we pull the Fibonacci from the closing to the wick, and you extend it. You wouldn't have gotten an entry since price hasn't reached this place, but what you could see is you could see the counter trade that you could have taken from here. This was a counter trade opportunity. You could have used your confirmations, but like I said, I wouldn't trade against the trend. I want to look more to the buy side. Let me show you another secret. This is another entry we could have taken from this three candle formation. It's called a classic CC formation. I'll be showing those entries in future videos. This, you could have taken this entry. There's an entry type with confirmation where you could have entered this trade actually, but that's for another video. Let's currently stick to the three candle breakout and the Fibonacci. Let's look for more examples. Yeah, I think this example right here, you have this candle and one, two, three, four candles that took took 4 candles to break this bearish candle. It was broken by this bullish candle right here. So you pull the Fibonacci from here to the low and you extend it. You just missed the entry by a millipip. Like, what the hell? But look at the counter trade. The counter trade up here. Look how perfect these Fibonacci points were. These are the secret ways that you could actually use the Fibonacci. And I'm just showing you examples of gold. Imagine all the other currencies that you could trade with this simple strategy. I prefer trading the 4 hour. I prefer swinging more than scalping. I'm more like a swing trader because that's my kind of style. I don't like staring at the charts and guessing every second. I want to give my trades room. I want to give my trades room to travel. So my stop losses are pretty big and my TPs are pretty big as well. If you guys want more examples, we could look for them. Where do I have an example? One more example and we could close the video, right? Yeah, we have a really good example right over here. See this candle, it took 1, 2, 3 candles to break this bearish candle. So you pull the Fibonacci from here to the swing low, extend it. This is a perfect entry. Like, look how beautiful this shit is. So beautiful. Look at that. Enter TP1 and TP2. Wow. Like, absolutely beautiful trade. Wow. So that's pretty much all that is there to this strategy. It's pretty easy. I would like you guys to practice, do a lot of back testing. If you have any doubts, please do comment or try to contact me. And please do like, comment, and subscribe to this video. I hope you like my videos, guys. Have a good day. Thank you.